Okay, welcome back. It's Thursday, September the 18th, 2025, and we're currently looking at my trading view screen. In a little while, I'll take you over to the actual TopStep XFA. Let's just get rid of this advert. Right, so we're looking at the Dow Jones Industrial Average, also known as the US 30 on the CFDs. We've also got NASDAQ on the US 100 and the S&P on the US 500. What I'm doing here is just sort of talking through my latest project. We'll go into it, but the last few days have been pretty quiet as we wait for the FOMC, so I thought I'd just try and automate or make an indicator to do all the sort of heavy lifting on my analysis for the day. There's still a few extra bits that I want to put on just to sort of, give it more context. But I'm just going to talk through this, and then we can discuss why some trades this week did or didn't work. So going to the US 30, because I'm actually in a trade on that. It's on the Micro YM. So this big mess here of candles, if you like, I'm just going to hide this. All right, so yesterday we had quite a quiet day. Then US Open, big push up, then sideways move into the FOMC Fed decision. They clearly dropped the Fed's fund rate by 25 basis points. We had a big up, we had a big down, and then we went sideways. So, this sort of cleared out all the sort of stops below from the Asia session, London session, cleared out all the stops from the previous high. And if we go to the daily, you can see that we're at all-time highs. So, the FOMC rate decision just cleared out a load of stops. And then today we've had, a continuation of this trend, which has been going up since April 2025. So going back down to the M5. So every morning I would normally draw out, previous day's high, previous day's low. I would put in the other key levels that I'm looking for. And as you remember, there are a few things that I am looking for, which include the previous week's midline, which is this gold dash line here. The previous day's midline, which is this green line here. You can also see that we've got a red and green background. This just indicates whether or not price is above both of those lines. So, instantly you can have a look and see that we're trending higher or trending lower, relative to the previous day, previous week. Other things I look for are the previous swing highs and lows on the hourly. So this red line here is the sort of high of a previous hour, and this green line here is a swing low of a previous hour. And you can see it sort of steps up. Currently, we are, above the previous hour's high. You can see that we've broke through that. To the right, we have previous day's high and then previous day's low. And you can see that we're above the previous day high. This blue line here is the previous New York session open. But you can set that to, if this was your indicator, you'd set that to whatever sort of key level you look at. So what can I tell from this? I can tell that we're overall bullish. The green background itself gives us that because we are above the middle of yesterday's candle and the middle of last week's candle. We're above yesterday's high, so we're sort of pushing forward, trending, and we're above where the US session opened yesterday. So everything looks bullish. My model, if you like, to put all this into practice would be usually to wait for a break lower than the, say, a previous hourly swing low. So you'd wait for candles to come down there, and then I'd wait for a change in delivery. So something like this black line here would appear, and then once we get a close above that, that's my signal to go long. And then if you would have seen me talk about it in the past, and you'll see me talk about it again in the future, then I just sort of manage my stop below a swing low and target a risk reward of 1 to 2. Today, I'm not following that model at all. Like I said, if we're above all of the sort of trending signals, so this bull trend seems to be going. So with a bit of experience, you get to know what a breakout looks like. So for me, I'm looking at this high here. I'll make it black and thick. So yeah, the sort of candle which started with an open and then close lower. I'm looking at that opening price there. I'm seeing that we had a close above that, and then we came back down and retested. And what we did was retest another one of those type of candles where the opening price basically started with started there. So as you can see, we pushed up, couldn't break through, pushed up, broke through. That's an indicator that we are going to take out this liquidity above there. Pushed up, closed above that one, so indicating that we're going to take this liquidity up here, which was yesterday's high. So for me, that was like a breakout, retest, and then continuation higher. And now all I need to do is manage my stops. So if I just put a long position on, so it's essentially looking for a breakout, retest, continuation, and then we're looking for a 1 to 2. So you can see you could have easily got that by now. But rather than, because we're trending, who knows when the trend's going to stop? We could stop at any point now because we're, some people would say we're overextended. So just say we've made a 1 to 2, which is good. Then we've got this other indicator of, within the price action that we're trending. So we have a big green move up, these candles here you can see are going up. Then we have like a shallow pullback or shallow sideways move, another impulsive move. We don't go back beyond halfway through that, and a big impulsive move, another sort of shallow sideways move. So whilst we're doing that, I'm just going to trail my stop underneath these candles here, and then just see if we can keep getting impulsive green candles to the upside, and then just track that. All right, going to a so US 500. I was actually trading this yesterday, and I just want to explain why I think it didn't work. So the model is wait for a break of a swing low. So you see here, we had these candles come down, break a swing low. Then we've got this fair value gap here, sort of showing the displacement and the imbalance. And as you see, we had this V-shaped return, also leaving fair value gaps or imbalances, showing that there's some aggressive buying or the sellers have just completely got out. Then you can see this black line here at the top of this candle. We had a close there, so I went long there, expecting to target up here, but also having to have my stop all the way down here at the previous swing low. So to get a risk reward ratio of 1 to 2, I was expecting price to go a lot higher. And as you can see, we just sort of drifted down. Then we took out that previous swing high, but you can see we also didn't close above it, and hence that should have been an indicator just to get out at break even. And then what happened? We just drifted down, took out my stop, and then the FOMC stuff happened. So the reason I don't think it worked is, as you can see, the background here is not green. We were below the previous day's midline. We were above the previous week's midline, and we did have the correct setup, if you like. We just couldn't do what we're doing today, which is sort of prove that we were bullish because we weren't above this green midline from previous day. So that's why I don't think it worked. Right, I'm just gonna flip this to my face and then go to the actual trading software. Right. And then we want to add a new one. All right, so you should be able to see the actual XFA now. All right, so performance stats, currently P&L's 1,251. Win rate is just under 60%, which is good. Profit factor has dropped down to 1.87, so I'm going to try and get that back up to 2 or 2 and above. Average winning trade is 96 and average losing trade is 76. So that's the correct way round. I just need to try and get up to around $150 as my average winning. Best trade is still 527. You can see that we had like a big push up, mainly to do with that trade, and then slowly but surely grinding higher. Looking at this week's trade-in, $16.80, $10.88, and $2.08. What that is showing is that I've made some trades, they failed, and I've just took a couple more to get back to scratch. I find that if I'm in a drawdown and the market gives me an opportunity to get out of drawdown, I should take it and then wait for another setup. Trying to hold, for like double my winnings to then get that profit doesn't seem to play out. So I've been taking scratch days. If the market gives me an opportunity to get back to 0 or into the green, then I'm all happy with that. The 18th was today, and we're currently in a trending trade. You can see here that we've just broken through one of my little guides here. So looking to see if we close below this green candle. If we can, then I'm going to close out this trade and then wait for something else to set up. So I've got a minute 40. I put these lines on just to sort of show that, once it starts accelerating higher, then you need some sort of caution. You need it to go sideways, really, so you can sort of reduce the angle of this line. Nothing goes up forever, obviously, and at the moment, because this isn't the model that I choose to sort of trade, if you like, this is more of a old school breakout, retest, and continuation. I'm just going to take whatever the market gives me, and in a minute's time, if this candle was to close below the opening price of this green candle, then I would close this trade out and just take whatever it gives me. It's either that or wait for it to come all the way back down and stop me out, which is, as you see, below the opening price of this green candle here. If we were to get back above these candles and close above them, not only would I get rid of this blue line, I would move my stop up to where this thin black line is. As you've got 20 seconds. Doesn't look like they're going to keep me in this trade. All right.
Order filled.
So we're out for that. And then you can see it's coming down lower. Yeah, that trade's over and done with now. You can see here, this morning made $90 on the micros. If that had been the minis, that'd be $900. I'm just trying to build up the actual account slowly and just sort of show execution, and then hopefully we can put into practice what I've been able to create in that indicator on TradingView, and then we can sort of try and find those sort of trades and then sort of just prove that that works. But for now, that's it. There's unemployment claims later on today, and then I'm looking ahead to next week, and we're going to have, I'd imagine, quite a lot of news which could, either confirm the decision that yesterday. We've got core PCE, we've got unemployment claims, got flash services and manufacturing PMIs. All of this stuff is going to either make the Fed look good or a little bit silly. But yeah, I'll update you next Tuesday on the 23rd. How well I do for the rest of this week and early next week. All right, until then, have a great weekend, and I'll see you then.